All right, what's up, everybody? Drew, aka Catching Rockets here. Um, so, wanted to do things a little bit different today. Partially gonna mess around for a second, but I wanted to start off with a question based on this information here. Somebody tell me, and of course, like this is open to people in Shorty's Discord that are live with me right now, but also open, excuse me, to people in YouTube that are going to be watching on a slight delay. Where is the setup here for whatever puts, calls, whatever you think? I want to know your guys' opinion. And then also, based on this information, where would you close the trade if you took it? And I'll zoom in more. That way, like, you guys can give, like, actual levels closer based on price. And while the delay's catching up, I want to show you guys something that I think is pretty cool. My son, I'm going to leave this up on the screen while I talk really quick, but today he just went for his music lesson, and they're figuring out new songs because they're doing, in 1 month, they're doing a 80s themed concert for some cancer benefit charity organization. I don't know exactly what it is. And so they had to learn, like, they only do one song that's like an 80s song, and that's Fade to Black. And basically they can't do that song because it's about suicide, and it's for, you know, like a cancer benefit. So they didn't want any songs that were like depressing or talking about death or whatever else. So they had to axe that song. And so now they have, like, I think 3 weeks to learn 5 new songs to do. And Taz, if you're raising your hand to answer it, just go ahead and type out the answer. But so my son's music teacher, like, tasked him with, he mostly plays guitar, but he can play keyboards as well. And so his music teacher tasked him with playing keyboard and singing at the same time. And he feels comfortable playing guitar and singing, but he's never played keyboard and singing. So immediately he told his music teacher, like, oh, I can't do it. And his music teacher was like, really? Like, you can't do it? Like, kind of like, of course you can do it. And so he came home and basically just looked up the notes for this song. He's never done it before. And this is the result of the very first try, which I think is awesome. All right. So I'll answer it basically based on what I see, and also based on the information that I'm showing you guys. And before I say this, I think there's, like, new people today. Oh, I guess not. Just left. I think everybody in Shorty's Discord right now listening is already in my, like, mentorship group. But if you're not, DM me, and you're welcome to join. So we've been talking about this, at least I know for sure in the last session, but I think in the last 2 sessions, I feel like there's 2 good answers here. And the 2 good answers would be as far as your entry is concerned. I feel like there's only one good answer for exit, and I could be wrong, but um, for me, there's only one good answer. We might make it to the July POC, which I saw somebody say. Almighty Beardman, I'm talking about this right here. If you're trading and you see this, like, would you be in calls here? Would you be in calls here? Would you be in puts here? Would you be in puts there? Like, what would you be doing? So, yeah, Triple G's saying calls at the value area low and close at the POC of the current session. So let me see. I didn't even think about that, but that's probably very valid. You wouldn't have got much. So this would be the current session POC based on this information. I'm wondering, is it higher if we go backwards? Like this? It's lower. So yeah, you wouldn't have got much. Okay. So what I saw, basically, to me, I would have accepted either of these answers as being right. You could be in calls here, right? This retest was way cleaner. But if we look to the left, you know, like we've already bounced off of this a couple of times. So technically, today, you know, was a retest, right? Or this first bounce. And based on, if I went long here, I would probably have to look left to figure out where to close. And I didn't really give you guys this information. And so the first bounce, I wouldn't have had as much information, and I would probably be looking to close through here, and probably most likely the POC, right? And that just gives us like a 1.5. The second bounce here. So I mean, if you took both, like, you're kind of golden. The second bounce, if we look here, we have a strong high, right? Based on that, I would want to be closing right around the bodies of these candles here, which is going to give us 2.8 move, which is decent. And if we play this forward, I know we go higher. But this would have been a good spot to close. We would have closed into strength. And I don't know if they ever hit the July POC. But, I mean, I guess we can just turn off replay and look. But I don't think we did. Yeah. And actually, see, it would have even been a good close here. So always try to pay attention. Strong highs, strong lows. Yeah. So that's kind of how I would have traded it. Yeah. Big bullish candle. This one. If you're talking about this poncho, I mean, that would make sense. Because, well, depending on how it played out. But, yeah, in 1 minute. You know, like, when we broke through and then broke back above, you could slap calls or slap long. But we ended up coming back and retesting it again. Anyway, just something a little bit different, something to get you guys thinking. And then I realized, like, you guys should have called me out on this. I always kind of like to highlight this. Like, this is, if you notice, like, when I draw these circles, it's not accidental. Like, the fact that this level is, like, slightly above, basically, like, right here, this is acting as support, you know, over and over and over again. Resistance when we were below it, flip to support here. So this was right within our call level, except I typed it out wrong. And I can't believe you guys didn't call me out on this. I'm like, and I remember saying, like, oh, I need to be really specific about how I'm typing this. And what I was saying is, if we're in puts from here down, close puts, don't close your calls, and watch for a bounce where you would be getting into calls. And then this would probably be difficult to catch, but for futures traders, this shouldn't have been too hard. I'm trying to think. We were long here, I think, or here. Shorty's Discord. I can't take credit for this. Shorty called it out. I traded it. Yeah, so we went long at 5/4/45. And so you can see the first tap of it, we were long. Basically, we had a 25-cent drawdown, one tick. And I closed at 65, I think 65.50. So we tapped. I closed. It actually came back down and retested, and then closed bullish. Yeah. But I got 20 points like really quick off of this bounce. And that's the only trade I took today. And I only took MES because it was a new trading combined with Top Step. I should say like a new funded account with Top Step. This I drew at the open, and I was saying if we break over this, we're going higher, and if we break below this, we're going lower. And of course, they kind of like wicked through and then dumped. I don't know why I'm like rambling. And also for people that don't have, or that are here for like option setups, I don't have any today, unfortunately. Excuse me. I don't think today was necessarily like the easiest day to trade, though. These were kind of your trades, at least that I saw. This here, this here, this here. Or I should say these are the ones that worked out. Because there's other trades I might have tried taking that wouldn't have necessarily worked out. Like I might have tried... Actually, yeah, I did. I tried to short here, and it went against me. And then, but I was like very minimal risk. I said if we break 540, that I would be closing the trade. So this was like really tight, and I was targeting 537 right there. And I think also, like, after I called this out, what it was I stepped away from my computer. I came back. Whoa, I just hit my mic. Sorry. And I sat down, and we were right here, and I'm like, oh, this is a short. And then like a couple of minutes after I said it, I was like, that wasn't like one of my better call outs, because we're in like an uptrend here. We made a new higher high. Actually, shoot. There. And then basically from here, we made a new higher high, right? And so if we're getting in here, I mean, there's a chance they reverse it. We would have to be making higher highs, higher lows for them to retest this and be able to short it or take puts. But yeah, they gave a little sell-off and then they ran. So unfortunately, did not work out as planned. I didn't really realize, though, they gave us like almost a full point down. Yeah. But basically, like, those are the setups I saw today. And I probably also would have tried to go long here, but actually, no, I wouldn't, because it's like literally right at the end of the day. I wouldn't be trying to trade the last 10 minutes on SPY. With that said, let's take a look and see what we can find for tomorrow. And I think I already said this, but I don't have any option subs for tomorrow. I looked through a bunch of tickers. I did not see anything that I like. Our two trades from today were invalidated. We were looking for puts below. We never got there on Visa. And JP Morgan never made it up to our level to get into puts, which is a bummer. We came pretty close, but not quite. All right. I feel like today is one of the most reasonable trading days we've had in a pretty long while on SPY, where it's like 10.5 points, which is actually still pretty, it's still pretty big moves for SPY in a single day. Especially when it's like, I guess this is a uppercase B profile, but like you would kind of expect 10 points on a trend day, not on like a pretty sideways day. Or I should say a ranging day, where we're just kind of trading in a range. We can't draw SIGs right now. Let's take a look at our TPO. I don't know if I said this, but I hope everybody had a good day today, and I hope everybody is doing well. No spike today. We have single prints at the top and on the bottom. I should add, oh, now it looks like we have new people from Shorty's Discord. So I'm doing like, I'm mentoring a couple of friends, and I decided to just open the group up to anybody from Shorty's Discord that wants to join and kind of like watch me mentor them. And, for people in Shorty's Discord, it's free. So if anybody in the voice chat right now wants to join that's not already in it, just DM me and I'll add you. For anybody that's not in Shorty's Discord, it would be a one-time $100 fee to join, and you basically get to watch me mentor people. But it's not just like only me mentoring them. We're also having conversations in there, educational stuff. Roberto, when I was looking through them, Roberto, I think they're invalidated. They might play out. I'm going to mark them as invalid. Sorry, somebody asked me. Okay, Steven, when you're charting futures, everything will be with extended trading hours on. And except for TPO, you turn on regular trading hours. Hey, Timothy. Yeah, I mean, masks are pretty worthless, unfortunately. Unless you're talking about N95s, those are 95% effective. So basically, every 100 times that you come in contact with somebody with a bug, you're going to get it 5 times out of 100. Surgical masks are pretty useless. To a degree. So the blue surgical masks that like everybody wears, if you just like and when I say this, I'm not trying to be demeaning or like put anybody down, but I guess I can see like a small reason to wear them. But really what they're made for is surgery, right? And what they're made for is when a surgeon is doing surgery, if he coughs, he can't like reach up and cover his mouth, right? And so the surgical mask is just made to catch spit. So like if I'm talking and, spit is coming out, the mask is made to catch those droplets. Or if I cough, it's made to catch the droplets of spit that would be coming out of my mouth. But it does absolutely nothing for germs and viruses. Like the holes in the mask are way too big. You're still breathing those in. It's just made to stop particles, droplets, like large. When I say particles, it's large particles. So like it won't stop smoke particles or anything like that. Anything above 0.6 microns. Actually, no, I'm talking about N95s. N95s will stop anything 0.6 microns and above. I don't even know about surgical masks, but really it's made just to catch droplets. It's not meant to filter out any kind of bacteria or viruses in the air. It's just going to, again, stop droplets. That's it. So somebody asked a question, and now I can't find it. I'm trying to find it. What to learn. I'm so confused because I literally was just looking at it. Cole Francis asked if I trade 0 days. Yeah, I do. Not very often. I'm mostly a future trader. Okay, Christopher, I just found the message. Christopher Vasquez asked, what besides market profile, supply and demand should I know for options? Well, on my channel, and if you look in the description of the video, so you should, first and foremost, you need to understand market structure, like uptrends, downtrends, bull flags, bear pennants, bull pennants, rising wedges, falling wedges, whatever, blah, 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 blah. You should have an understanding of those things. I don't trade based off of those things, but I'm aware when they're occurring on charts. And so I would say just have an understanding of that stuff. But again, most importantly, you need an understanding of market structure. So like, for example, if I got into calls, I don't even know. What's a good example? let's just say I got into calls here. So right now, this is a strong low, and you could also say there's a buying tail on this candle, right? Where very aggressive buyers came in and started pushing price up. If I'm taking this trade, what would invalidate this trade? And basically, it's going to be change of structure. So I can't really draw a line here because I have my single prints right now, but basically the single print line, the first one on the top, if that's broken, I would have a change in structure, right? So now, if I did something like this, I just made a new lower low, right? Based on like the trend that we're in here. So this, I don't know. Right, so this is our, so he went from a downtrend, bounced into an uptrend, right? So if we broke this low, we're having a change in character, and we're making a new lower low, right? So that right there would invalidate my trade. So you need to just be able to understand, like the market structure, and then general patterns. I wouldn't be stopped out, just breaking that, but I would want to find, like a key level below to put my stop loss, probably something right around this range here. And then it also depends on what I'm targeting to the upside. But, just looking, I always look left when I'm trading. And looking left, like I probably would want my stop loss below these candles here by just a little bit in order to take calls here or be bullish here. But again, like this, if we did, if we bounced here and then came up and then did something like this, as soon as this happens, we just had a change in structure. We went and made a new lower low, and we're invalidating like the current trade that I'm in. But I would still want to give it a little bit of breathing room to see if we did happen to get a bounce. What's up, Lisa? But so with that said, pinned in the description of the video, there's going to be, I think, 4 books. One is Getting Started in Technical Analysis by Jack D. Swagger. That one, you don't need to memorize, but that's market structure. Like that's one where you want to have a good understanding. But again, you don't need to memorize it. The next book is going to be Volume Price Analysis by Anna Cooling. Good book. Don't need to memorize it, but there's some key points you want to take away from there and keep in the back of your mind when you're trading. Trading in the Zone by Mark Douglas is a book on psychology, which I think is like a must read for traders. And then the last book, which in my opinion is probably one of the most important trading books, is going to be Volume Profile by Trader Dale. And you can even go straight to his website and get it for free. So like if you just type in Trader Dale, Volume Profile, and go here, Trader Dale or trader-dale.com. You can literally just get the book for free. I hate stuff like this on websites. Like that reminds me of like when the internet first started and like every website had like animations and pop-ups and stuff, and it seems really scammy. But I've actually downloaded this book from here. You just type in a name. I think I just put my first name, Drew. I typed in my email address and I was able to immediately download the book. The only thing with this is, of course, you're going to get promotional emails. You can always unsubscribe from them if you're not interested in them. But he actually will email like trading setups that he's watching. And a lot of times they hit. A lot of times they're good. So the emails are actually like informative. It's not just some, crappy spam that you're not interested in. But this book is probably one of the best trading books, in my opinion, ever written. And like if we look at it really quickly, so this is the PDF that I downloaded directly from his website for free. I also have the physical copy because I like to read actual physical copies of books when I read. But I downloaded this because I like to reference it when I'm teaching. And it's a lot easier to reference a PDF than like take pictures or whatever of an actual book. But right on page 25 is where he starts talking about trading strategies. The first one is support becoming resistance or resistance becoming support. And what he's saying basically is bounce, bounce, breakthrough. And then on the retest of that level that was support, you would enter short or grab puts. Inverse, where you come up, tap it, tap it, tap it, resistance, 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 breakthrough, retest, go long or grab calls. The one thing that I would mention that I don't think he talks about is if you look at both examples, we're breaking through kind of with strength. We're not wicking back through the level a bunch, and we're actually like staying below it for several minutes. I'm generally waiting for at least 3 5-minute candles below a level or 3 5-minute candles above a level, and then waiting for the retest. And if you look both examples, I don't know what time frame we're on. It doesn't tell me, but it looks like we're getting at least 3 5-minute candles above before we get the retest and go long. Then he talks about like open drive, which is another great trade. Open test drive or market open plus open drive, which is where we have like the open of a session, big move from that level, come back, retest it, enter in the same direction. Same thing here, area where we're consolidating, big move, retest, enter long. And I talk about this as well. One of the things that I like about this book, I don't know if this is intentional. He doesn't mention it, but this looks like a failed trade to me. And I think it's great that like an author is showing that in his book, because when we trade, we're just trading probabilities, and you're not going to be correct 100% of the time. You're going to have trades that don't work out, and that's like really the hardest part for traders to work through, is taking the losses. A lot of people like get to the point where they'll have like win for a week or two, and everything's looking good, and then they'll take one loss, and then the next thing you know, they blow their whole account because they start chasing wins and YOLOing and FOMOing. And so you've really got to accept that you're not going to be right all the time, and when you're wrong, you need to make sure that you're in the right headspace before you take another trade. And then he talks about AB equals CD. This I don't really use, but you're welcome to read it and learn it and use it. It works good. And then he's talking about specific strategies based on the session. So like London session, knowing when they open and close, London, New York, Sydney, and Tokyo, kind of important to know. And then based on when the session opens, you're looking for a big move, either up or down, retest, enter in the same direction. And then they have like the daily open, daily, weekly, high and low. So this book is just full of like really good information. And then I think basically page 25 through 45, 46, I would say you really want to memorize. We were just talking about like our strong highs, strong lows, which is these two here. And we were talking, so there's our strong low. This is a strong high. This is a weak high or a poor high. I don't know if he shows a weak low, but this is looking pretty weak. But basically, like with a weak high, you expect price to break through and go higher. And with a strong high, you don't expect them to get back to the same level. If they do come back to the same level, it's pretty much always an immediate short. But when you have a strong high or a strong low, you want to close your position before. I was going to say before it gets up to here, but the whole point is it's probably not going to get up to here. So you're closing before the high. That way that you're getting out before it reverses on you and goes in the opposite direction. This stuff is just like cakewalk shit. Like, and when I say that again, like I'm not trying to like minimize what trading is or how easy or difficult it might be for some people. But if you really just take the time to read the books that I mentioned, and then you really focus on memorizing page 25 through 46-ish on Trader Dale, and don't get tilted when you take a loss, like you'll do good. I guess this isn't single prints anymore. I should have deleted this yesterday. It's weird. I can show an example. I mean, we did this yesterday when we were live yesterday, right? Where was it? Was it this? Must be. I took a screenshot because I wanted to use this as an example for something else. But is this it? Yes. Okay, so here, when ES opened, we sold off, made like a strong low here, bounced, and then I believe, yeah, right here, I said this is a short. And then actually the rest of this I want to show on the live chart, but let me get the levels. It was 54.2650. And then my other level was 5438.25. Okay. And one of the things that's cool about this, so when I called this out, I mean, people that were here live yesterday, they saw this whole thing, but I mentioned, I think right when price was right about here on this candle here, like, oh, this is a short. And I would have mentioned it sooner, but I wasn't looking at the ES chart. I flipped over here to see how things were moving on futures. And I was like, oh, this is a short. And you want to close at 5,418.25, right? And at the time, we didn't have the previous week value high here. Or maybe we did. I hadn't drawn it yet. If I had drawn it, I would have closed there. But I closed here based on this strong high. I mean, the strong low, right? So, again, what we just talked about, when you have like a strong low or a strong high, you want to close before it. And so, basically, my eyes went to this, the body of that candle, to the body of this candle here. So like if I do this, should look decent. And that was my reasoning for closing at 5,418 and a quarter. I wanted to get out at the top versus trying to get the bottom, which actually would have worked out great if I did target the bottom of this body here on this blue candle. But regardless, it was like $1,000 for one contract of ES. Shout out to Jose. Why? What's up? Yeah, so anyway, what gets interesting with this is if we do, well, we can leave it like that, but if we go, where is it? I thought there was a way to make this extend left. Could be wrong, I guess. I guess it's horizontal ray that way. But what we can do is grab this one. And if we do this, right? And this all kind of happened, or not kind of, this happened live. We sold off pretty quickly. And then we bounced here. And I was like, oh crap, like what did I miss? Why are we bouncing here? I would expect them to come down, you know, to this range here. And then I looked left and I was like, shit, I completely missed this, right? So this is exactly what we're talking about. This is resistance, 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 right? That then over here, we gapped through, and then here we sliced through it. It became resistance again here, came back above, and then it acted as support. And so I drew this line after the fact, and I'm thinking in my head, oh, this might be the spot to close. Right now, this is a SR flip where it's acting like a pretty strong level. And this might have been the bounce. But also the important thing to notice is like, something that I always talk about, even if I miss something like this being a major SR flip and I take a trade, I don't go, oh, let me start trailing here because I made a mistake, right? So anyway, let's just say our entries here. This is our take profit level. Bro, how high up is this? I would want my stop loss above this wick as long as I can get, one risk to reward or more. And then my eyes also kind of go to here where, if I can do this and get 2 to 1 or more, I'm good. And that would be the trade that I would be looking to take. And if at any time, in this trade, I didn't trust what I saw, even though I kind of majorly missed this key SR flip, and I started trailing my stop loss, I would have got stopped out, probably break even or in the red, and then it would have come down and hit my level, and I'd be kicking myself in the butt. You've got to trade your plan. You've got to let it play out. And you've got to accept your risk before you enter the trade. I mean, basically just the thing to do is say, I don't want to do all the math on it, but let's just say you're risking $200 to make 600. It wasn't quite that. It would have been more like risking 200 to make like 500, I think, roughly. And as soon as you click sell to be in short, or if you're buying puts, as soon as you click, buy for your puts, or even before you click buy or sell, you need to accept like this $200 is gone, right? And if it hits my stop loss, it is what it is. If it hits my take profit level, great. It still is what it is. With trading, we're always just doing probabilities. Sometimes they work out in our favor, sometimes they don't. And you just have to roll with the punches. So there's that. So hopefully that answers your question. I forget who it was now. I think it was Roberto, but I could be wrong. Oh, no, it was Christopher. Anyway, Christopher, I hope that answers your question. Armin, in what order? It doesn't matter. You just read the books. There's not really an order. Unless you don't understand market structure, then you want to read Getting Started in Technical Analysis first. If you don't understand technical analysis, that's where you need to start. All right. Shoot, this was another short. This is yesterday's previous day value area high. But this looks good. What's the setup? This, well, it could be from here. So if you were short here, you need to be aware that your stop loss needs to be above 54.4250. This was our open, right? Or no, I'm sorry. This is not the open. That's the close. Never mind. This isn't what I thought it was. This is our open down here. I thought this was our open drive, but it's not. Take it back. This is just a retest of yesterday's previous day value area low, and I would just target the previous week value area high. All right. So I'm looking at futures just to see kind of where we're, how we opened, how we're trading right now, and it's just kind of flat, really. Like a 20-point range, give or take. Let's zoom out on SPY. Get a look at the big picture here. This might end up being an abandoned baby. So I guess it's missing the wick at the top. I take it back. But so this is what I was looking at. Bearish abandoned baby is when you have like a tiny little candle with a wick on each side just hanging in space, and then green candle before, red candle after, and then obviously the inverse for bullish, you would have a little red candle in space. But that is not what that is. This just looks like a little hammer. Oh, my stomach is hurting. So, big picture for me, this was an important level. Again, if we're looking at Trader Dale's, if we extend this line, right? Well, not quite. There. Everybody can see we gap through, right? Support, broke through. It didn't really act as resistance, but we bounced off of it again. Support. And now we came back to it, broke back through. At least on daily, it's not really acting as support and resistance. But if we go on a lower time frame, I'm sure it is. But right now, us closing above it would be more bullish for me. The the 2024 value area high. But again, being below on the daily makes me slightly more bearish. We still have decreasing volume as price is pushing higher, right? So this is a volume anomaly. Price up, volume down, basically just means that we're probably setting up for a reversal, and I really wouldn't be surprised for the reversal to happen here. And we've talked about this. We hit 559.36. I would be swinging puts, and kind of depends where it happens, but I would just say take like a week out, swing puts, and you'll probably get a nice payday. Okay. And so far, like, volume is confirming. Again, price pushing higher, volume going lower, coming up to a key level, generally indicates a reversal. Okay. Just a heads up. I thought I was okay when I started the video, but I think I ate something bad earlier, and my stomach is not doing the best. So if I jump up and run, that's what it is. Hopefully that doesn't happen. Where are we? Alrighty. Mañana. I would be interested in puts here. Again, depending on where we open. Okay. I want to make this very like clear and very intentional for you guys. Watch for calls here. Everybody clear? And again, we're not doing anything crazy. This is resistance turned into support, right? We come back to here. We might bounce from there. This is a strong low. They might not quite give us the strong low, right? Let's take a look at our news for tomorrow. This is always important. So if you don't have this information, or if you don't have this website, there's a link. Tuesday. So before the open, an hour before the open, we've got some pretty important stuff. CPI in Canada, medium CPI. U.S. has Empire State Manufacturing Index. Excuse me. And then after that, we don't really have anything too crazy until after the close. Okay. I'm noticing I have a bunch of DMs. I'm assuming it's about joining the mentorship group. So I just want to show this. If people are joining, when you join, I don't want to have to keep like sending at everyone's every time I add a new member. So one of the first things I would say, like, read the pinned message. The only thing is, this is slightly wrong, because he was saying to use periodic volume profile. And for our daily, we're going to be using session volume profile, SVP. But everything else is correct. So this is good. After you've looked at pinned messages, the next, I think there's a pinned message here. Let me see. No, there is not. I'm going to say this. If you join this group, I something like this, I have like a zero tolerance policy. Thank you, Almighty Beardman. I appreciate that. So, like, if people are arguing, causing problems, anything racist, sexist, misogynistic, any of that stuff, you're gone. Like, no questions asked. Really just zero tolerance. When I, when I do my YouTube videos, I'm always like, hey, like, love, peace, respect to everybody. It's not BS. And like in other Discords where I'm a moderator or an admin, I go by those channels' rules, and I enforce them based on how the owner of that Discord wants the rules to be enforced. In a Discord like this where it's my own, I'm going to be way, way less tolerant. Like, really just, it's not the place for it. If you want to have an argument with somebody, if you want to, whatever, be racist or whatever else, take it to the DMs. I would prefer if you're racist or sexist or whatever else, you just don't join my group. But there will be like a zero tolerance to pretty much all of that stuff. I really don't want to kick anybody out of the group. And so I would just ask, like, please don't push my hand, because I don't want to do it. I really don't. But I want this to be like a place where people can focus on learning, where we're not having arguments, where people aren't being disrespectful, and where we don't have a bunch of negativity. Really want this to be a place where we're lifting each other up and trying to help each other and get better as traders. With that said, if you join, we've only done 2 sessions so far. They're both recorded. They're private on YouTube, so you can't access. I mean, I guess people watching right now, you could pause and type this in, and you can watch the first one. It is what it is. And then the second one, I would recommend going back and watching both videos. My next live session is going to be tomorrow night at 10:30 p.m. Pacific Standard Time. I know it's late, but they're all recorded on YouTube, and that way they can be rewatched. But that's really like the only time where I'm free, where I can do something like this, where I can actually sit down with somebody and mentor them. So it is what it is. But if you do join, you're going to want to go and rewatch the previous 2 sessions. And if you're not joining, I guess you can just type this in and you can watch it. But this is going to be like at least a 6-month long group. It might last longer. I mean, I'm not going to, like, after 6 months delete the Discord channel, but I'm planning on mentoring these 2 friends for about 6 months, where really like the first 6 weeks to 2 months we'll be meeting pretty frequently. And then after that, we'll start meeting, like once a week, once every couple of weeks. Things will slow down once I've taught what I need to taught and kind of put them on the right path. So just throwing it out there, so because there's quite a few DMs. That way I don't have to tell everybody to go back and watch those videos, but that's what you want to do. And again, just keep it professional. That's it. I don't ask for very much. Anyway, this is what I'll be watching for tomorrow. today I took my one trade and then I went and I started making a bunch of beef jerky. I don't even know how many pounds, but probably like 5 pounds of beef jerky. So I made some marinades and sliced up all the meat and everything. And so I wasn't really at my computer, but tomorrow if I'm at my computer, I'll do my best to call out what I'm seeing live. And hopefully we catch some trades. I mean, for Shorty's Discord, I'll be live in the morning, but any other Discord that I post in, if I see something, I'll type it out and share it with you guys. All right. Ryan Reed, right now, with how much volatility there's been in the market, the contracts are very inflated on everything. So, yeah, all of the contracts right now in SPY are really high because of IV. Yeah. Why not? I have not gone through Quantower. I guess it's something that we can do. It's not really something that was a focus for me, because I feel like it's pretty straightforward. I don't think... I'm like thinking right now, like if I can switch screens and show Quantower, but I don't think I can. I'm loading up my Armin, Getting Started in Technical Analysis by Jack Swagger. So I'm like loading up my Quantower right now. So I guess the best way I can show this is just with a screenshot, because I don't want to... Well, I can't really move that bar. So on Quantower, whoa, why? Am I confused? Why is it when I make it big, it's off the screen? I don't understand. Anyway, we'll start here because I don't understand why when I make it big, this is off the screen. But this button right here, it looks like a helmet almost, I guess. If you click that, there's a bunch of little squares like this that I have at the top here. And basically, like if you click DOM, that pulls up your trading DOM, which is this here, or like a price ladder. This will give you like your positions. This is orders. This is your account, which would show like your current account, meaning like positive, negative, how big your account is, so on and so forth. So like if you click on DOM, you'll get something that looks like this. And basically with Quantower, everything you can snap and drag, right? So you can see like this is snapping to the top of my screen and to the left. And if I drag it over here, it'll snap over here. And so basically they're just cells that you can customize to how you like your screen to look, right? And then you can see by my screen, I have like my DOM over here. I have my charts in the middle. And then to the left, I have like open trades, open positions, working orders. And with your DOM, sorry. hopefully I can show this. Pretty funky. I need to resize this because I trade on a 49-inch monitor, so and my Quant Tower is on that 49-inch monitor. You can tell I'm like I'm struggling to fit this onto a 27-inch monitor. But basically, it's pretty simple. Here, under bracket, I use simple, and I have a basically stop loss. You turn it on here, on or off there. 40 ticks. And my take profit, 80 ticks. And again, turn it on or off there. And then once you set this, you would just right click it and set as order default. And so now, if I'm wanting to go long, that's going to be on the bid side, right? So if I want price to come down to a level, you can see right now at my mouse cursor, it says limit +1, meaning that I would place a limit order if I clicked right here, and it would place a limit order at 5,432.50. And when it does that, it would automatically put my take profit at 80 ticks and my stop loss at 40 ticks. I'm going to click in a second and actually like show you guys an actual order. If I clicked above price, it would fill me at market, at least on the buy side. So if I'm below, it's going to put a limit order, meaning that price would need to come down, touch it, and then I would get filled, and then it would go. If I click anywhere above, it's going to fill me at market on the buy side. If I'm doing something which I do occasionally, which is like, let me say, if we break over 1472, I become bullish. Then up here on the DOM, I can hold down my shift key. Or no, sorry, it's control. No, that's not working. What the hell? That's really weird. Maybe they changed it. Alt. Let me look this up. Pressing and holding the shift key while left clicking. I'm holding shift. That's not right. I'm going to have to look into this. I don't know why it's not working, but normally if you're above price and you hold down shift where it says limit LMT +1, it would change to STP for stop, meaning that when price crosses through that level, it would then fill me long. If I'm wanting to get in short, I would use the ask side here. And if I click above price, that would mean that price would have to come up to there, hit it, and then it would fill me, and then, hopefully price starts going down from there. Same thing, if I click below on the ask side, it's going to fill me short at market. And if I hold shift and click, it should put a stop order, and I don't know why it's not changing, but it should change to STP, which is weird. When I use Quant Tower, I have mine set up with cluster, imbalance, cluster, coloring by volume enabled, settings. This is a lot, but if you want my profile, I'll send it to you. And basically all you would do is wherever you install Quant Tower, so So like this, for instance, mine's in downloads, Quantower top step. You click on settings, go to templates, and you would grab, like, I would send you this drew.xml. You would just paste it into here. So Quantower settings templates, paste it here. And then once you've done that, you would need to like close and reopen Quantower, and you can literally just right click. Dude, it's so annoying. Right click here where it says chart, apply template, and go to Drew. And then it would give you basically the same, where you have your delta on the right, volume profile on the left. The yellow line is your POC or developing POC. This is my my developing volume profile. This is my developing delta. And it would also give you imbalances, which is like this yellow line. This green line is also an imbalance. This green line up here is an imbalance. And you can see, like, when they came up and hit this, we've been selling off from there since then. And it's given us, like, I don't know, like 7 points, give or take. The key with imbalances that a lot of people miss is this imbalance is in the middle of a trend. So you're generally not wanting to get into an imbalance that happens anywhere but at the top or the bottom. Like in a downtrend, you would want to get in a balance like this, where it's at the very top of a downtrend, or an imbalance like this, where we're close to the bottom of an uptrend, right? So you would want to wait for it to come to here, go in long. These work pretty efficiently. If they occur, if the imbalance is at the top of an uptrend or at the bottom of at the top of a downtrend or at the bottom of an uptrend. You would also want to learn footprints, which I'm not going to teach right now. I have videos on it on my YouTube. But let me just show you guys really quickly, like, what an order would look like. We'll go down to like 392. I don't think they're going to give me a news candle that's going to randomly fill me. If they do, then I'm going to murder whoever asked me about Quantower. So, again, I use this general bracket, right? And let's say I want to get filled if price comes down to 5,392. My orders immediately go in where I'm 40 ticks stop loss, 80 ticks take profit. But I can look at my charts, right, and be like, oh no, like, we're going to come back up to this imbalance. So let me close, right at the beginning of this imbalance. Stop loss, like, I'm good, getting stopped out. Basically, like, if we clear this delta node, it's going to invalidate my trade. So I'll take my stop loss here. And you can move your orders just like I showed, just by clicking and dragging. You can also click and drag here, which would have the same effect. If I click and drag here, it's going to move the entire bracket. So like if I did this, my entire bracket, so my take profit, stop loss, and my limit order all move up. If I want to cancel this, I just right click it. It'll cancel all of the orders. One very important thing to know is, like, if you do this, a lot of people make this mistake, right? So they get into their trade, whatever, they put in their levels, and then when price gets to here, it starts to look weak, and they go, oh, let me just close it. And they click close position. And when they do this, it leaves your stop loss and your take profit as orders in Quantower. And I mean, like, a lot of brokers will do the same thing. If you open a trade with a bracket order and you don't let either your stop loss or your take profit get hit, and you close it manually, it'll leave your stop loss as a level where you would be getting in short, because this is a sell order. And so probably, like, where you were wanting to, where you would not want to be short, which is like at the bottom of the range, you would be getting filled short, which would be horrible. And then same thing up here at the top of the range. If it came up and hit it, they would also fill you short because this is also a sell order. So if you do, I shouldn't even teach this because if you haven't done 6 months of one trade a day, only hitting stop loss or take profit, you shouldn't be closing your position for any reason. But if you are stupid enough to click this button, make sure after you click that button that you cancel all orders by clicking that. Okay? Otherwise, it's going to leave those 2 ghost orders and you're randomly going to get filled. You're not going to know why, and you're going to lose a lot of money. Okay? But basically everything in Quantower, like when you adjust something, you right click it, you can save it as a template. If you want to take multiple contracts, you can right click, and save that as your order default. So everything's like kind of customizable. Up here, you know, buy, bid, price, ask, sell, profit, loss. You can right click up here and change this to your liking. Of course, you can resize all of this. Yeah, and then like you'll notice here, I have time and sales clicked. It won't trigger right now, but I have mine set. Excuse me, sorry. To where anything over 20 orders will show up here. So if somebody market buys 20 ES, it'll show up over here, the time, the price that the order came in at, size, and then this is, it'll say buy or sell, but you never know if it is actually a buy or sell. You have to use your assessment skills on that one, because basically buying happens on the bid side, but I can sell on the bid and I can also buy on the bid, right? Or I'm sorry, buying happens on the ask side. I can buy at ask and I could also sell at ask. So that's how I use Quantower. Hopefully that all makes sense. It's just a really brief, quick overview. But again, like you click the that little, what's it called? Like the thing that looks like a helmet. I'm taking another screenshot just to kind of show you guys. They have... So if you click that little helmet looking thing or whatever it is, I don't know. Again, like all of these grids will pop up, and this is where you would customize your setup. So like CHT is your charts, but it explains, you know, like it tells you basically what it is. TNS, time and sales, surface DOM. They have TPO charts. Copy trading if you want to have multiple accounts that you're copying from one account to the other. Order entry, DOM trader, which is what I use. I guess you can simulate your trading, which there's literally no reason to do that. The only reason you should be using like simulation is to learn a new platform. So like if you've never used Quantower before, put in a couple of trades, take profit, stop loss, whatever. And then, what's it called? Once you've learned how to use the software, you should never be using this again. You don't use it as a tool to learn how to trade, because it takes out the hardest part of trading, which is the mental aspect. And then down here, it's like your positions, working orders, trades, order history. Yeah, and then there's more and more and more. But anyway, you just click on these little squares. It'll open up whatever it is you click on, and then you just click and drag it to wherever you want it on your screen. I'm going to go ahead and put all my stuff back where it belongs now. Anyway, hopefully that was helpful. But like I said, if anybody wants that template that I use for footprints and all that, you can just DM me and I'll send it to you. With that said, I think that's going to be it for tonight. Almost time for me to go take my kid back to his next band practice. He has 2 practices on Mondays. Always running in this house. This Jared. Yeah, so just watch the video, or re-watch the video. I already covered Spy. But ultimately, I think they're targeting the 2024 value area high, and then we'll be back to bearish, I think. Oh, that's wild on Mighty Beard Man. Weird. Why not? If it literally hit your trigger to a T, then yeah, there's a chance that it wouldn't trigger. Sakar, no, Shorty's Discord is not a one-time $100 fee. It's $100 a month, or $99.95 or whatever it is. Yeah, I don't know. Maybe I need to update my Quantower or something, but Shift is not working for me. It's weird. What was I going to say? Oh, so like with the buys, like if you have your order right at like whatever 55 and a quarter and it hits 55 and a quarter, there's a chance you'll get filled. There's a chance you won't get filled. If your order is at 55 and a quarter and it hits 55, 100% you're getting filled. Okay. So with that said, that's going to do it for the video today. Going to go take my kid to his next music lesson. Hopefully everybody has a good night, good evening tonight. For people that DM me, I'll get back to you in just a minute here. Yeah, with that said, much love, much respect to everybody. As always, huge thanks to the members of the stream. Extra big thanks to the friends of the stream. To anybody that's new, I would appreciate a subscribe. Basically, 5 days a week we go through Spy, look at setups for the next day, and then if I find any, I cover option setups that I'm looking at for the next day. Unfortunately, today I didn't have any. And then also a few times a month we do, or I should say like once a month, sometimes a few times a month we'll do classes where we actually teach trading. And then generally every single one of these videos, there's some kind of teaching moment that always kind of occurs. Like today we were talking about entries with Trader Dale's book. But yeah, I mean, the whole point here is just, we teach, we give it away for free. There's no paywalls. And actually something I want to talk about really quick. I was talking about this. I don't remember who it was that I was talking to, but there's a lot of scammers on the internet teaching trading right now. And if you stop and think, like, they had to learn from somebody, right? And most of these books, you know, like Trader Dale's volume profile is $10. Or like I said, you could just go to his website. If you don't mind reading off of a computer or an electronic device, you can get it for free. Free PDF download. He also has other books, but they're great books, but I would start with volume profile and trade just off of volume profile for a few months before you look at things like order flow, footprints, things like that. But all of those books are on his website for free. If you live by a big library, you can probably even go to the library and check these books out for free. If not, I think at the worst case, like the most expensive book that I've bought is like $35. And then these people, they sell courses for like $500 or thousands of dollars or whatever, just like crazy numbers. And they probably learned from those books. But the problem is they didn't become a good trader by reading the books. And so now they're trying to sell you a course of regurgitated information that was taught better by somebody else that wrote it into a book. And they're trying to sell it to you so they can make money because they're not able to do it through trading. You want to avoid those people. Pick up the book and just read it on your own and learn it for way cheaper than you would like learn regurgitated bullshit from scammers that aren't actual profitable traders. Because the content of a lot of books is not difficult. Like understanding concepts like the entries on Trader Dale's that he goes over, very easy to learn, very easy to follow. But what's difficult is the psychological aspect of trading, which those people that are selling courses, they were able to learn all the technical jargon, whatever, technical analysis, how to find entries, moving averages, whatever, blah, 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 RSI, MACD, da, 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 da. And they can talk the talk, but they can't walk the walk because they can't nail down that psychological aspect. And they probably just keep blowing accounts over and over again. And I would bet that a lot of them trade with prop firms, and that way they can show like winning trades, that are like thousands of dollars when they're just trading on a simulated account, basically. So yeah, point being, pick up books, avoid those people. I've always kind of said like everything is free on this channel. And that's true to a degree. The first time I've ever sold anything is to watch me mentor my friends. And that's a very different, that's very different than teaching. Armin, if you're numb to emotions, you'll be one of the best traders ever in the world. But it's very difficult to do. The issue is like, I don't know a single person that's not egotistical. I know a lot of people that don't have super big egos. I also know some people that have some very big egos, and I kind of stay away from them. Not people that I like to be around, but I still know people like that, of course. But even myself, I'm egotistical. We all are, to a degree. And we love to be right? And so when we, let's just say you clicked buy here and price does this. So first off, we're wrong, number one, which is difficult for us to accept. Number two, we're wrong and we're losing money at the same time. It's a double-edged sword to our egos. And when that happens, it's very, very, very hard for us to swallow it. It'd probably be like the equivalent of me saying, hey, here's my phone. Go ahead and take this like a pill and swallow it. It just doesn't go over very well. And once you learn to accept that pill, once you learn to swallow that pill and shake it off like nothing happened, that's when you become a good trader. And so again, learning the technical analysis, learning the setups, learning where to take trades, all of that stuff is pretty simple. I wouldn't say it's easy. It requires a lot of time and a lot of studying, but it's a lot easier than learning how to swallow that pill. And that's where people fail in trading, is learning how to get over that mental aspect of trading. I can give you guys the secret right now. The issue is most people won't listen to me. But if you do listen, this is really the secret. You do one trade a day for 6 months. And the reason you do one trade a day for 6 months is it forces you to wait for good A++ setups. And when you're forced to wait for a really good setup, you'll be patient and you'll learn patience and discipline, which are both very important in trading. if you feel like you can take multiple trades in one day, you'll be like, this looks decent. I'll take a trade here. And if it misses, I'll just take another trade and I'll make up the loss. That thought process doesn't work. When we're trading, we never want to be trading from the perspective of, I'm going to make it up. I'm going to make it up. I'm going to make it up. We want to be trading from the perspective of every trade is a new trade and what happened before is irrelevant. I showed, what was it? I don't remember exactly when I showed this, but I showed this fairly recently. This is my trading for the last 2 weeks. I took more trades, but at the time when I took this screenshot, this was my trading for the last 2 weeks, and I took the screenshot on a Wednesday, right? This week I was sick. Monday, Tuesday, Wednesday, Thursday, I didn't take any trades. Friday I took one trade at like midnight or something crazy like that. Thursday night, Friday morning. Monday I took 3 trades and only had a small win. And this is something that I want to focus on, is this day. Tuesday, 1 trade, nice size win. Wednesday, I took 3 trades and 2 winning trades, 1 losing trade. Had a nice day. So now if we focus on Tuesday, that's not Tuesday. This is Tuesday. Showing that I practice what I preach, right? I always talk about 1 risk, 2 reward as a minimum. 1 second, everybody.
I need to bring her to go class, right? So
7:30, right?
7.
7. Oh, we'll go in 2 seconds. I'll be there.
You will go?
Yeah. Give me just a minute. So I'm going to run really quickly, but I'm going to just finish this thought. I thought my son's class was at 7:30. It's at 7, so I have 10 minutes to get there. Anyway, 1 risk, 2 reward every trade. Doing that, or like 1 to 3, 1 to 4, whatever the ratio is irrelevant as long as it's more than 1 to 2. You can do things like take 2 losing trades in a day and then 1 winning trade and still be profitable for the day. That's the goal, right? And then on the days where, you take 3 trades and you're 65% accurate, you're going to have good days. 1 trade and you're 100% accurate, you're going to have a good day. If you're doing 1 risk, 2 reward minimum, you only have to be correct roughly 34% of the time to be profitable, as you can see in this scenario here. This is the big thing. 1 risk, 2 reward, 1 trade a day for 6 months. Journal every single trade on an electronic journal. And look for setups when the market's closed like we just did right now. Okay? With that said, I'm going to run. I got to go take my son. Sorry. I thought I had like roughly another 15 minutes before I had to leave. But with that said, much love, much respect.